Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the August 5th stock market wrap-up for you to use on August 6th. First off, let's go and start with the S&P 500. Take a look at it. S&P 500 pulled back today. Very big volume, and is it a technical distribution day? Yes, but once again, look at the bullish tail on this thing. So I don't even know if we're going to be able to base, but I'll tell you one thing. I'm getting sick of these. Look. 1 day pullback, one day pullback, 2 day slightly pullback, go rally. This is getting old. This proves that this rally right here is a short squeeze because bull markets don't act like this. They take more time to get going. There's bases. There was no base here in March. There's no base in April. There's a small base here in May. Then that gives then to another base from June to July. But seriously, it's just not enough. We need more. We just need more. We just need more time basing. We're not getting the proper amount of time basing. Also, we have a market moving up on lower volume. Look at the weekly chart on the S&P 500. Look at the volume on this rally compared to the volume on the sell-off. Okay? And look at the volume on the last rallies that we had in 2008. Look at the April-May rally. Look at the volume. And look at the attempted rally here. Look at what happened to volume as it went along. And now, of course, we don't have any volume again. Now we have volume today on the pullback. It's a distribution day, granted, which means that, so you got to do this. 1, 2 distribution days, 3 distribution days now. However, all 3 have bullish intraday tails, which means we're going to probably have another up day tomorrow, which means that we're not going to have any more perfect charts to load up on. So I know that we have a 69% gain in Rhino, a 87% gain in SCLN, a 90% gain in OMN, 150% gain in Dan, and a 56% gain in SMED here and there. We got a lot of winners. However, all of these winners are breaking out of short bases that have not allowed me to load up on. And the stocks that are breaking out of big long bases are either going nowhere or are too small for me to load up on. One of my recent longs has been PXLW. And you can see when I went long, look at the strong move in BOP volume. Price above the 50-day moving average, closes at the high a day. Very bullish intraday tail. Lots of green BOP on the chart, so obviously I bought here. Get in the next day at 162, and now it's at 240. If you guys don't know what that is now, I'll show you really quick. In 1, 2, 3, 4, 5, 6, 7 days, a 49% gain. But how am I supposed to load up when it doesn't have max green BOP the entire way in the base? I can't. It's risky. But let's say that, you don't decide to do that and you end up buying something like TKLC here, which was a long of mine. Let's say, though, that you decide to load up on this one. Let's say that you loaded up on this one and look at how it reacts. Looks great. Oh, but the good news is by buying right off the 50-day moving average, look what my loss is, 1.59%. And another stock that we'll be selling most of that I was talking about that was pretty, might as well go and show you guys because it doesn't matter if you buy it now, you're crazy. Vita. This was one of the charts I thought was basically near perfect. What was wrong with it? Easy. I can see it without. Is there max green BOP the entire base from June to July? No. Look at the early July. Is volume perfect? Yes. Is price pattern perfect? Almost. 599 is not the high a day. 618 was. So I found something a little I don't like too much about it. So I did not load up. Well, a good thing I didn't, because even though it worked out right away, and in 2 days I had a nice 12% gain, making it look like it was just going to go rallying to the moon. You can see what it looks like now at 660, but if you go take a look at any after-hours quotes, you should see it around the $5.75 to $6 area, I do believe. I'm not sure just yet, but that was about where it was last time I checked it. And if you go check that out, that's where we bought it. So it's gap down to where we bought it. Now, what's going to matter is whenever I re-update my telechart, if I still have max green BOP or if I still have green BOP and there's some intraday support tomorrow, I will continue to hold. However, if BOP goes yellow or red, I'll be selling some. If BOP goes red, there's heavy volume and there's no support intraday, it's all gone and Vita will be dead. My first buy of Vita was way back here in late June. Took it forever to get anywhere. Now that it has, of course, it's failing. So great. This is such a fun bull market. And then, of course, as I keep telling you, Rhino, Great breakout, great action. But once again, the base is too small. Base should be going back here, just like Vita. Look at Vita. See how long that base is? That's how long Rhino should have been. So I constantly have problems with this bull market. Even though I'm making money, I'm not happy at all. Now let's look at the New York Stock Exchange. You got the huge volume again today with a big intraday reversal on it. So the NYSE stocks along with the S&P 500 stocks are good. Now let's go and look at the S&P 600 first before I go to the NASDAQ. Once again, look at the bullish intraday tail. And let's look at the mid-cap 400. Look at the bullish intraday tail. Now let's look at the NASDAQ, which is my proxy that I always follow, that I want to beat. You can see it's got a bullish tail, but not quite as bullish. And if you look intraday, what's very interesting is at the end of the day, the market was coming back. And as it was moving off the bottom, all of a sudden everybody was like, I bet you we close green. I bet you we close green. We're going to have a green close, everyone. S&P 500 is green. Yay! And then what did they do? They went, the end of the day dump came and they went ahead and kept selling on us. So I'm going to consider this a true distribution day. And to me, this is distro day 1. Why? Because after the insatiable uptrend, it had a down day. But it really wasn't down because it opened lower than where it closed. Then it had another down day, which to me wasn't a down day because it opened at 1965, closed in 1967. The only problem was it closed in 1975 the day before. So once again, it opened lower than where it closed. Hard to call that a very bearish day, if you ask me, personally, based on my history and experience. And so now we go up again. And as of yesterday, I can't remember how many days it was. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 of the past 20 stock market sessions, the NASDAQ has been up. And in that, 1, 2, and nope. So 2 of the 3 down days before today had the market open low and close high. So very hard. So basically 19 out of 20 days were positive. Is that a healthy uptrend? No. You need order. You need basing. Once again, like I said, the March nothing and this June to July basing period right here, it didn't produce anything but Rhino. And like I said, Rhino should have had a Vita chart pattern. So look at the NASDAQ there, and notice how that corresponds perfectly with Rhino's basing attempt, almost. Rhino based a little bit after that. And then look at Vita and that base. So Vita's base is what I want. This is the kind of breakout I want. And I want my charts to look just like this on a weekly, except for a few things. Max Green Bop in the beginning of July. Max Green Bop on the uptrend before it ends, and then the entire base, and on the breakout. A high of day or as close to a high day as possible close. 599 with 618 high day doesn't cut it. If it would have been 605, 604, 603, 602, 601, 6, absolutely it would have been good enough. But 599 should have been the high day, or 6 to 605. That should have been it. And also, volume should be heavier. TSV should have positive divergence, not negative. Relative strength line should have positive divergence, not negative. Even though that's at 599 and the old high is here at 602, the relative strength acts like that the old high at 602 is coming with the price around the 575 mark, when we can see it here as 599. So keep that in mind. That's why we're having a rough go about in some stocks. And that's why it's possible that you've actually gotten your butt handed to you during this bull market, because ADY, if you were long it before the breakdown, let's say that you bought this breakout here, okay, let's say that this was your buy point. Okay, you're leaving with a 30% loss, and let's say that you moved your money over to Cena. Okay, so now you're in Cena. Whoops, another 30% loss. So, you know, you had 100,000, now you have 70,000, and now you have about, what, 50,000 left. And now let's say that you went ahead and then bought Hearn. Okay, so after Cena, you're upset, and you're like, okay, I'm going to take that money and move into Hearn. So now I'm long Hearn. Now you just lost 70%. So now your $50,000 is worth right around probably $15,000 to $20,000, and that's from an earlier balance of $100,000. So think about that. And then let's say that the day before yesterday you decide to buy MLNX. Whoops, you're down 17%. Not good. And then let's say that you bought TKLC last night for today, down 10%. Not good. So it's possible that your $100,000 is actually turned into $10,000 or less if you went through a span of buying ADY, Cena, Hearn, MLNX, and then TKLC. So stuff like this doesn't happen in true blue bull markets. So I don't know who's out there thinking that this is a true bull market, but I suggest putting down the marijuana, stop drinking the beer, stop sniffing the glue, and stop snorting the coke, and come back to reality and realize that we're in a very huge, large short squeeze. And if you look at a weekly right here, let me go to an arithmetic weekly. Look at the NASDAQ. Look at how well off the highs of 2007 it still is. If you guys don't know, I'll go ahead and do this. 30% off. Hey, by the way, do you guys remember 2000? I do. So let's